Alrighty guys, we are back for the second video of the night, and it is getting late. I will do my best to get these out way earlier because, yeah, this late doesn't do anyone any good. I don't know if anyone's up, but it does hold me accountable to myself for the plan and, going through all this stuff. So, yeah, so we'll do better and get these out earlier. So let's go over the plan for tomorrow. So we'll go through emerging markets. Like I said earlier, I do want to add to this position if I can. So tomorrow what we're looking at is stocks to open pretty weak, very weak. And most of that is due to Micron's earnings, with 9% of this fund in Taiwan Semiconductor. You would expect Taiwan Semiconductor will open up weak as well, and it is down after hours, albeit 2 points. So basically nothing. I would love to add to this, just like I would love to add to any of my positions while they're working. But I will not be trying to pick the bottom. So this morning in Dow Jones, with that weakness, I thought this is nice. I'm gonna that's right kind of around the area where I had wanted to place a trade anyways. Tomorrow I think is going to be a little bit different story. Potentially, it could be. I could be completely wrong, but regardless, this is my plan, and I will stick to it. It's my plan. I'm sticking to it. I will add to this if price is supported nicely. I don't know when. Could be mid-morning, could be afternoon, could be close. It could be never. Maybe I could just blow this entire thing out. Maybe it completely fails. But if it does get support at some point, then I will add to it. Moving on, we're going to go over to Goldman Sachs, and this is a juicy one because what the frick, we have some things to talk about on this one, and I'll try not to go too long on this, but I'm reading through this report and it's just freaking ridiculous. So I'm looking, I would love to add to this. This is one I was super excited about. Well, super excited is the wrong word, but I love this chart, just generally speaking. I love this chart. They're kind of a comeback story. I mean, look at the jump in revenues here, or earnings, I should say. Increasing their dividends, Great looking chart. I mean, look at that. Consolidating from all-time highs. Looks great. So really would like to add to this. So anyways, look at this after hours. Down $10 after hours. Like, what the frick for? So first let's look, where is this? 448. 448. Right around the 50-day moving average. Which is sweet. I would love to add there if I could. Again, I'm not going to try and pick the bottom. I'm not just going to add right here. I'm going to wait and see if this price is supported. If it is, I will, in fact, add. But anyway, so I'm trying to look like, what the heck's going on after hours? So we get this Fed stress test that came out. I guess it came out after the market closed today, which is ridiculous that they do this crap. And what else is ridiculous is I remember that they said, we're going to have the results of this in like a month or 3 weeks or 2 weeks. I forgot when it was, but I remember thinking like, there's no way I'm going to remember what day this is, so I'm going to write it down. I wrote it down. I freaking can't even find it anywhere. So let's go through this and see how ridiculous this is, and I'll go pretty quick on this. I could talk on this for a long, long time. But look at this. Revealed to face greater projected losses than last year in a downturn scenario. So immediately you think, so they've gotten worse. They're worse. Okay. They remain well positioned to endure a severe recession and maintain their capital because the Federal Reserve said so. I'm sure that's just fine. I'm sure they're not going to get bailed out by taxpayer money like they have it, the last time. Okay. This year's stress test shows large banks have sufficient capital to withstand a stressful meet their okay, that doesn't matter what you say. Is although the stress test scenario is as severe as last year's, it resulted in greater losses. So again, it reiterates the fact that they're worse off than they were last year. Due to slightly riskier, just minuscule, no big deal. Riskier balance sheets and increased expenses. We'll go over why are they riskier balance sheets. We'll go over that if I can remember. We'll go over that in a second. Reflecting 2023 regional bank crisis. Right, yeah, see, okay, that important lessons have been learned. I wonder if these people, they just say this stuff with a straight face, I'm sure. And I wonder if the people who write this and put this out there can see the hypocrisy in here. They're worse off than they were last year because of riskier bank balance sheets. Very next sentence, they've learned important lessons. So they clearly have not. Does anybody put this together? The fact that they don't is just shocking to me. And that they can just get away with this. People don't hold them accountable. It's so weird. They're generally well positioned. They're clearly not generally well positioned. They're worse off than they were last year. But what are they going to say? They suck. To withstand a sudden funding shock in the form of shifting deposits. So first let's talk about shifting deposits. That's a nice way of saying if everyone freaks out and just takes their money. Sudden funding shock. What the heck does funding shock mean, right? People think that's how they think they can get away with that because nobody understands that. Funding shock. Funding shock assumptions, yes. That's the liability side of a bank's balance sheet. So that means their liabilities side has gotten worse. Because banks, they borrow money to fund their liability side of their balance sheet. So they're paying out a certain portion for deposits and whatever, right? They're paying interest out, the small or whatever it is. But they're still paying it out. So they need to generate yield from somewhere. And so they need to get funding. They borrow money for this crap. So that's what the funding they're talking about, a funding shock to be able to cover their liabilities. That's what that means, a funding shock. A shock in the form of we have no more money. We can't pay our liabilities. That's what that means. Shifting deposits from people going, I'm going to take my money out. Hypothetical losses. They're hypothetical, nearing $685 billion. No big deal. A 40% decline in commercial real estate prices. Yeah, exactly. 36% drop in home prices. Significant. Huh. Has it really been 36%? Anyways, this is the hypothetical scenario. Well, the friggin' 40% decline in commercial real estate is already here. Unemployment rate peaks at 10%. I mean, we know the unemployment rate is already a lie. How do we know that? We could go into that as well. But it's already a lie. Just look at how does the government calculate employment rate, and you'll be like, what? Okay, so let's talk about why do they have riskier? Where did it say that? Slightly riskier. Set it somewhere on here. Slightly riskier. It's on here somewhere. Why? Well, because bonds suck, and they've lost a lot of money on their bond positions, and commercial real estate has been bad. So the CLOs are underperforming. They're taking losses on those. We have AAA rated tranches of CLOs that have taken losses for the first time since the great financial crisis. So that's why they need riskier positions, because they have to fund the liabilities on their balance sheet, and the risk free positions, treasuries, they're underwater. So you have to go out farther on the risk curve to fund the liabilities. So that's why the bank's balance sheet has gotten worse. But don't worry, because they said important lessons have been learned. Increased credit card losses from consumers. Yep. That's not surprising. But they should know this. I just don't get it. Riskier corporate credit portfolios. Yeah, see, yes. They have to go farther out on the risk scale curve. Because government bonds have not been able to fund their liabilities. They so it's like, what is that bank in Japan that's freaking selling $63 billion of their bond position, and by the way, those are just US and European bonds. They're keeping Chinese bonds. They're just selling US bonds. So it's like what they said. Don't worry, we just are selling these bonds, but it's a huge loss, but it'll provide us a lot of liquidity so we can buy some CLOs. So it's like you cannot manage the safest, most liquid bonds in the world. So your plan is to go farther out on the risk curve of bonds, and you think you can manage that. It's just freaking ridiculous. Yeah, see, okay, so large bank exposure to commercial real estate remains an area of focus. From the last time I checked, and this is many months ago, large banks are not exposed to commercial real estate, really. Like JP Morgan, I saw it's like 1% of their balance sheet, which is probably like $100 gajillion. But let's talk, okay, real quick. My goodness, I'm going off on a tangent. Real quick, let's talk about let's talk about the money supply. How does the money supply get created? It's not from the Federal Reserve. The Federal Reserve does not create money that you buy goods with. That comes from two sources, the Treasury and banks. The Federal Reserve creates, essentially what they create is an interbank token. That commercial banks have agreed upon, that this is a currency between us. But it's not legal tender. So in other words, you can't go to the store and buy stuff with it. You can't buy goods or services with it. But the purpose of it is it frees up a bank's balance sheet. So that way a bank has more incentive to loan money out. A bank loans money, which creates money. Out of thin air, And the bank has $10,000, and tomorrow the next bank has 9,000 and more. And they just do that continuously. When times are good, they're just bang, bang, bang. When times are bad, they reduce the loan creations. When loan creation and money supply is reduced, assets don't like that. When it's increased, assets do like that. And that's pretty simple, and that's what that is. My gosh, I hope this video is not long. Oh, man. Okay, we're going to go through this quick. So, Bitcoin miners. This totally took a different turn than I was expecting. Bitcoin miners. The price of Bitcoin, I mean, dang, man, this has really dropped off. It's hanging in by a thread. In terms of trading around the price of Bitcoin here, I treat that as the same as any other position. I'm not going to be adding below the 50-day moving average like 90% of the time. In terms of actual Bitcoin, I have a completely different strategy. Actual Bitcoin is a separate subject entirely. But in terms of getting exposure to the price movement of Bitcoin, I still treat it kind of similar. However, the Bitcoin miners have been acting just fine for the most part. I mean, you have HUD 8. This was just on the elation portion of the video. That's acting great. Bitfarms looks fine. CLSK Clean Spark does not look that good, but we're not seeing major declines. And Clean Spark's really good. They're really good. Marathon, one of the best in the industry. Their CEO is kick-ass. So, all this to say, what is performing the strongest in this asset class? Is it the price of Bitcoin? No. Is it Bitcoin miners? I would say so. Sometimes I get so distracted. Look at this. This is hysterical. JP Morgan Chase attracts $15 billion from wealthy clients seeking to cut tax bills. Oh, man. I bet you the majority of those people are saying tax the wealthy. So we're not going to do anything with these. I have no plan. This was a mention. I wanted to show if the price of Bitcoin can continue the strength. I would suspect Bitcoin miners to act well. Let's go over eBay really quick. This was another one that I was excited about here. Oh, here. Yeah, started a position here. Super excited. Closed the day. I'm like, dang. It's great. It's phenomenal. You know, I had an alert set right here. Bam. Next day. Heck yeah. You know, and chop. I got out for a little loss. A little bit. And in looking at eBay, it's very similar to Shop. Where way back here a year ago, I remember trading this and being really excited because the bull market was raging, getting started. Yeah. Not everything was participating, but, you know, indexes were really moving. So I was thinking, let's look for something with some high velocity. Never worked out. Chart looked good. Never worked out. Because, I mean, you know, in hindsight, looking at this, you'd think, like, what the heck? But, you know, 64 to 56 is a significant percentage decrease. That's huge. So, when you're in it, that sucks. Okay, that was just an observation. So, let's briefly go over the plan for wheat. We already did this. If this goes down below 555, I will sell a third of the position. And that's it. Let's go over indexes. I guess this is why Dow sold off. I was wondering that. Why the heck did Dow sell off? I guess it was because of gold, the Federal Reserve. Oh, let's look at their unusual options activity. Deep pocket investors have adopted a bearish approach toward Goldman Sachs, and something market players shouldn't ignore. That to happen, blah, blah. When was this reported? Yesterday. Huh. Well, they were right. Somebody always knows, right? Taking account, it appears that whales have been targeting the price of 310. Price range from 310 to 470? What the heck? Over what time frame? Do your own due diligence. Okay, let's look at this. Put options. And are these that they place for buy order? Because I didn't get any of these alerts. Call volume, put volume. Sorry guys, I should probably go over this not on this video. It's probably boring as hell. So is this September 20th? So are these bought or sold? Anyways, moving on. Maybe this thing's freaking gonna blow up and it's no big deal. That's why I just do a starter position. Who cares? But we'll see. We'll see what happens. Again, I'm not going to sell this tomorrow unless something, really starts selling off. We're starting to have actual bearish news show up that I would say means something. That Japanese bank, it's kind of a start of it. What else? There's some other things. But anyways, some actual bearish news that I would keep an eye on. The thing I keep coming back to is 1, we're still in a bull market. 2, I'm in very light-ish positions here with markets extended. 3, the money supply has just started increasing in May. June, I gotta write that down to look. What's money supply doing? M2. You guys can look this up. M2 supply. M2 supply. The Federal Reserve has a list of it, and it's funny because they don't actually know, because they only regulate banks that are in the U.S., right? But banks all around the world can create U.S. dollars. Just kind of the simple answer is U.S. denominated debt. So a bank will give a company in Argentina, for example, a loan denominated in U.S. debt. Say you've got to pay in U.S. dollars, and here is $1 million, and just like that, there's another $1 million U.S. dollars in existence. So, anyways, M2 supply. So I keep coming back to that. So the money supply has just started to increase. So, that is super bullish. But again, just because my opinion doesn't really mean anything, I'll trade my plan. Plan emerging markets. If it's supported, we'll add Goldman Sachs. If it's supported, we'll add. However, Yikes on the unusual options activity. That is a yikes. Because that's people with real money betting. You know what I mean? These aren't analysts that are coming out with some bullshit. It's not the Federal Reserve saying, but we've learned our lessons from last year. It's like, no, these are real people that influence prices. So that is something to take into account for sure. And also with the Dow too. My goodness. Goldman Sachs is the second largest position for the Dow. And then you have Micron. Bad earnings. But then yesterday you just had FedEx that had killer earnings. So I'm not going to think about any of those. And we will see what happens. The plan stays the same. Emerging markets add. If it's strong, if it's dumping, I'm out. And again, it doesn't matter. It's a small position, starting position, but I love to add to it, just like I would any position. Goldman Sachs, same thing, a started position. That's why position sizing is important. If it's gonna dump, we're out. But I like to add to it. We talked about Bitcoin miners. That's just an observation, something to keep an eye on. eBay and Shop. Wheat. We talked about that. Nobody cares about wheat. I really wanted to trade options in wheat. Or futures in wheat today. But I was preoccupied and kind of missed this. And then it really sold off. So that's it, guys. Man, I have no clue how long this video is. And probably no one's going to see this on tomorrow, but later.